In the heart of Manhattan, a financial giant is on the brink of collapse. It's September 2008, and Lehman Brothers is facing a crisis unseen by the world. The once mighty bank, a symbol of American capitalism, teeters on the edge of oblivion, threatening to pull the global economy down with it. Lehman Brothers was founded in 1844, a small cotton trading business that grew into a Wall Street titan. Their influence stretched across continents, their decisions echoing in the halls of power. But beneath the gleaming facade, cracks were forming, unseen yet inevitable. In the early 2000s, Lehman Brothers was riding high, powered by the booming housing market. They gambled heavily on mortgage-backed securities, reaping enormous profits. But the bigger the risk, the greater the fall. Unbeknownst to many, the foundation was built on sand. Inside Lehman's headquarters, the trading floors hummed with activity. Phones rang incessantly. Orders were shouted across the room. The bank was a hive of ambition, every deal a step closer to greater fortune. Yet the seeds of destruction had already been sown. Wall Street was blinded by success, ignoring the growing storm. The subprime mortgage crisis was gathering strength, unnoticed by those basking in the glow of short-lived triumphs. Lehman's leaders, confident in their invincibility, dismissed the warnings. In boardrooms, decisions were made that would seal Lehman's fate. Executives, driven by bonuses tied to short-term profits, pushed for ever riskier ventures. The allure of instant rewards overshadowed the looming threat of catastrophic failure. Signs of trouble began to surface. Analysts raised alarms, but their voices were drowned out by the overriding urge to continue the profit spree. The banking empire, like a ship on a collision course, ignored the iceberg ahead. In a dimly lit office, a lone analyst pores over spreadsheets, eyes wide with disbelief. The numbers tell a story of impending doom, yet his warnings go unheeded. Within the towering walls of Lehman Brothers, denial was the prevailing sentiment. The housing bubble finally burst, sending shockwaves through the financial systems. Mortgage defaults soared, and the value of Lehman's securities plummeted. Panic spread like wildfire, but Lehman's leaders were still grasping for salvation. Meetings turned frantic as executives scrambled to devise a rescue plan. In hushed, tense conversations, the gravity of the situation became clear. Lehman Brothers was standing at the precipice, with few options left. The Federal Reserve and Treasury Department watched closely, debating intervention. Could Lehman Brothers, a cornerstone of the financial world, truly be allowed to fail? The implications were staggering, threatening economic collapse worldwide. In the corridors of power, negotiations unfolded. Desperate phone calls, urgent meetings, and last-minute deals characterized a frantic attempt to save Lehman. But time was running out, and the cracks in the foundation had widened too far. Investors began to panic, pulling out funds and selling stocks. Lehman Brothers' stock price plummeted, a stark reflection of the bank's unraveling fortunes. The empire was crumbling, its fate sealed by the invisible forces it unleashed. A final, desperate attempt to find a buyer failed, leaving Lehman with no lifeline. The financial titan that had once vied for global dominance now stood alone, its empire built on the illusion of endless growth. On the evening of September 14, 2008, the decision was made. Lehman Brothers would file for bankruptcy. This announcement sent an icy chill through the financial world, signaling the beginning of an unprecedented global crisis. As dawn broke over Manhattan, Lehman's employees gathered outside headquarters, faces etched with disbelief. The reality of their situation hit hard. The institution that had defined their lives was no more. Inside the abandoned trading floors, silence reigned. The lifeblood of Wall Street, once fueled by ceaseless ambition, came to a standstill. The failure of Lehman Brothers marked the end of an era and the beginning of financial uncertainty. The ripple effects of Lehman's collapse were felt worldwide. Stock markets plunged, economies faltered, and millions faced job losses. Governments intervened with bailouts to stabilize their economies, fearing a domino effect of destruction. In homes across the globe, families felt the impact. Foreclosures and unemployment soared, turning the American dream into a nightmare. The unseen collapse of a single bank had triggered a global financial crisis, affecting every corner of society. In the aftermath, investigations began. Politicians, economists, and financial experts sought explanations and accountability. How could such a monumental failure have gone unnoticed until it was too late? The spotlight turned to risky financial practices that had gone unchecked. Derivatives, subprime mortgages, and credit default swaps were dissected, revealing a tangled web of greed and negligence that had brought the world to its knees. Reforms were proposed to prevent future crises, but the scars of Lehman's fall remained. Trust in the financial system had been shattered, and the road to recovery was long and arduous. In the years that followed, the legacy of Lehman Brothers cast a long shadow. It served as a cautionary tale, reminding the world of the dangers of unchecked ambition and the fragile nature of economic empires. For the employees who lived through its rise and fall, the memories remained vivid. The rise of Lehman had promised fortunes and dreams fulfilled, but its collapse left a void that could never be filled. Financial historians now debate the lessons of Lehman Brothers. The bank that once stood as a pillar of financial strength is now a symbol of systemic failure and the dangers that lurk unseen beneath the surface. The story of Lehman Brothers is one of ambition unbridled by caution. It serves as a testament to the risks inherent in the pursuit of endless growth and the unseen collapse that can follow. As new financial empires rise, they are haunted by the specter of Lehman. The lessons of the past serve as both a warning and a guide, encouraging vigilance in a world driven by profit and power. In modern boardrooms, the phrase "too big to fail" echoes with renewed urgency. The collapse of Lehman Brothers serves as a chilling reminder of the limits of human foresight and the inevitable consequences of hubris. The unseen collapse of Lehman Brothers reshaped the financial landscape, forcing a reevaluation of risk and reward. It stands as a monument to the fragility of economic systems and the enduring need for transparency and accountability. In the annals of history, Lehman Brothers is both a cautionary tale and a lesson in humility. The bank that dared to chase unbridled ambition ultimately fell, leaving behind a legacy of caution and reflection. For those who watch the rise and fall, the story of Lehman Brothers is a testament to the unpredictable nature of financial empires. It serves as a reminder that what is unseen can be more powerful than what is visible. As the world continues to grapple with financial uncertainty, the lessons of Lehman Brothers remain relevant. The empire's collapse serves as an enduring warning about the dangers of neglecting systemic risks. The ripple effects of Lehman's collapse have woven themselves into the fabric of modern finance. They are a constant reminder of the need for vigilance and the perils of complacency in a volatile economic environment. As financial markets evolve, the lessons of Lehman Brothers continue to guide future generations. The specter of its collapse looms over new ventures, urging caution and a commitment to responsible growth. In classrooms and boardrooms alike, the story of Lehman Brothers is taught as a pivotal moment in financial history. It is a chapter that underscores the importance of ethical leadership and prudent oversight. The collapse of Lehman Brothers serves as a sobering reminder of the limits of ambition and the power of unseen collapse. It is a story that continues to resonate, shaping policies and perceptions within the financial world. The lessons of Lehman Brothers echo through the corridors of power, influencing decisions and reforms aimed at preventing a similar fate. It stands as a testament to the need for balance between ambition and caution. In the world of finance, Lehman Brothers remains a symbol of both the heights of success and the depths of failure. It is a narrative woven into the very fabric of economic history, a tale of unseen collapse. The empire of Lehman Brothers may have fallen, but the lessons it left behind are immortal. It stands as a reminder of the unseen collapse that can occur when ambition eclipses caution, changing the world forever. And so, we remember the law of unseen collapse, a principle that warns of the dangers lurking beneath the surface, ready to bring down the mightiest of empires. Lehman Brothers' fall serves as a testament to this law, a reminder etched into history